Beyond Meat, ticker symbol BYND, has been a very high-flying stock throughout this year, climbing by unbelievable amounts. They just, however, released their second quarter earnings, and the stock dropped by over 15% in the span of 2 days. Technically, it dropped by like over 12% after earnings, but in the span of 2 days, it's down over 15%, which is definitely a big deal. However, they're still technically up by a huge amount so far. But either way, a lot of you have been begging me to make a video on Beyond Meat stock because it just happens to be one of the most popular stocks in the market right now. So in today's video, I want to take a look at their stock. I want to talk a little bit about their earnings, but I also want to take a look at the company as a whole. I want to talk about their financials and the markets that they operate in and what their future potential looks like as a possible long-term investment. So this should be a very fun video. I hope you guys enjoy this. Let's get started. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Let's go ahead and start by just doing a quick little introduction on the company so that you know what they do, and then we'll transition to the stock, the valuation, and their future potential. All right, now if you've never heard of the company, they're extremely popular right now because they offer alternative foods to meats that are made from plants, but apparently they do a pretty good job of imitating the taste of real meat, so their brand has become extremely popular among vegans and all other types of vegetarians. Now, they do have some competition, namely Impossible Foods, who offer similar products, although they won't be available in grocery stores until later this year, but many are already referring to both companies as a sort of Coke versus Pepsi war of the alternative kind of plant-based meat market. Either way, both are still having a ton of success, especially in the fast food market, as Beyond Meat can be found in places like Del Taco, Carl's Jr., and TGI Fridays, while Impossible Foods can be found in White Castle, Burger King, and even Applebee's. And I think they're also available at Little Caesar, which is pretty crazy too. I think they made like a pizza with like Impossible kind of meats on it as well. Either way, both companies are already facing major competition from much bigger companies like Morningstar Farms, which is owned by Kellogg, Gardein, which is owned by Conagra, and even Boca, which is owned by Kraft Heinz. To be fair, most of these companies have been losing market share while Beyond Meat has been seeing nothing but growth, but at just about 2% market share in the US, they really pale in comparison to what the bigger companies are doing. And that's not even mentioning the onslaught of competition that is likely to come even more so in the future, now that even more big name brands are starting to realize how lucrative the market has become, like Nestle launching a plant-based burger in Europe, and they already have a partnership with McDonald's in Germany that is looking like it may actually expand even into the United States, possibly by the end of this year. Not to mention that Tyson Foods is also planning to launch their alternative meat products during this very summer that we're currently in right now. And we'll take a closer look at these markets in just a second, but now that we have a little bit of context behind the story, let's take a look at the stock, because after all, Beyond Meat is still growing at a pretty fast rate, and that's translated even more so to their stock that has been absolutely on fire ever since they IPO'd just a couple of months ago at just $25 a share. I think it was really available to us at 45, but still the IPO price was technically 25, but it's now trading for close to $200 a share and was recently up as high as almost $240 a share, with an increase of over 800% again in just a couple of months, which is pretty crazy. This has led to what is, in my opinion, one of the most insane valuations out there, as they're not currently profitable, but they still trade for over 130 times their revenue. And that's even after the most recent drop of over 15% over the last couple days due to their second quarter earnings. To be fair, those earnings weren't extremely bad, as they did miss EPS quite a bit with a loss of 24 cents versus 8 cents expected, but they also beat revenue by a pretty large amount at $67.3 million reported versus $52.7 million expected, and they raised their outlook for the year as a result. But all eyes seem to be on their announcement of a second public offering of over 3 million shares, most of which are actually owned by insiders. I believe it was at least 3 million that was owned by insiders, who are basically cashing in those huge profits, since the stock is technically up by over 800%. On one hand, it makes sense to raise more cash now given the stock is insanely overvalued, but on the other hand, it does worry investors because of really two reasons. For one, some of that will dilute shareholders, but the other is, what we just mentioned is that a lot of insiders are actually selling. So that could mean that, they may not see the same kind of vision for the future, or they just feel that the valuation is too expensive, kind of themselves. So they're cashing in some of those profits. That can be kind of a scary thing as kind of like a retail investor or even an institutional one. But we'll talk a little bit more about that later. First, I want to give those of you who are not very experienced with stocks a little bit of context behind their valuation. If we take a look at Tesla, and I know this is a weird comparison, but you'll understand why in just a second. Tesla is one of the most hated stocks out there. It is usually one of the most shorted stocks in the entire market, depending on how you measure it. Sometimes it's even like the most shorted, meaning that Wall Street thinks that it's extremely overvalued. We constantly hear Tesla bears over social media and on the news and just kind of in general, always talking about how ridiculous the valuation is and how the stock absolutely needs to go way down in order for it to make any kind of sense as an investment. And even Tesla has a price to sales ratio of less than 2. Let me say that again. Beyond Meat is at 132, while Tesla is at less than 2. That's pretty crazy. Now, to be fair, Tesla only grew their sales by 82% last year. And I say only like that small, it's actually huge growth. But when looking at Beyond Meat, they did even better, growing by 170% last year. But there's a few things to consider there as well, because Tesla is doing billions of dollars in revenue while Beyond Meat is only doing millions. And yes, Beyond is growing like twice as fast, but it's also trading like 60 times more expensive. So the math just doesn't really add up. And the valuation, in my opinion, is absolutely ridiculous. But maybe I'm being unfair, and maybe there is even higher growth expected in the future, and maybe the market is expected to get even bigger than we could possibly imagine. So let's take a look now at their future potential and what is expected from them as a company in terms of their financials and where I kind of see them going in the future. Well, when looking at revenue estimates for the next 2 years, Beyond Meat is expected to continue surging, doing over $227 million this year and topping $362 million in 2020. As growth percentages, that's 158% growth this year and almost 60% the year after. So there's no denying that Beyond Meat is definitely a high growth company. Now, Markets Insider does give smaller estimates, but they give projections out to 2023, where they predict that Beyond Meat will top $1 billion in sales. They also project their EPS, which I believe is non-GAAP, will go from negative 26 cents this year to about $1.76 positive in 2023. So that's still enormous growth. However, even with all of that really high growth, that would still put them at a P/E ratio of almost 80. So again, that's with gigantic growth, and that's all the way out to 2023. So from a valuation standpoint, it still just doesn't make any sense at all to me. I mean, even their price to sales ratio would still be like somewhere around 11 or 12. And that's if their share price stays exactly the same for many years and your stock doesn't even go up, which would be pretty bad performance when you really think about it. Okay, now having said that, what is their future potential looking like given the market that they operate in? Well, for starters, I mentioned earlier that they only have about 2% of the US meat alternative market, but that can also be seen as a huge positive given that they have so much market share left to steal in the future. And these aren't just like small markets that we're talking about. That specific market in the United States could be worth billions of dollars in the near future and is growing by a compound annual growth rate of 24%. For context, the United States meat, beef, and poultry processing market is already worth hundreds of billions of dollars, but is technically seeing negative growth. So the fact that the only growth in this area is really coming from the plant-based alternatives kind of side of the market bodes very well for Beyond Meat, since they're in the exact part of the market that you would really want to be in. They're in the part where you're actually seeing huge growth. And again, that's just here in the United States. But if we look internationally, that's a market that could be worth over $1.5 trillion in just a couple of years, according to Statista, with the plant-based meats kind of part of it making up $140 billion of that market within the next decade according to Barclays. So that's still, really big market. And to my knowledge, Beyond Meat is still like a very tiny player in that kind of global market, because they don't really have a big presence outside of the United States yet. But they're definitely thinking about it, and they're making some big moves to tap into that unbelievable growth that is out there internationally. In fact, they're already talking about Asia as a key market for them to tap into, given that Asian countries have the fastest growing rates of beef consumption in the world. Yet places like China are also, some of the most polluted countries in the world, with a number of environmental issues. And guess what kind of an audience Beyond Meat is perfect for targeting? Environmentalists. Now, I don't know how accurate these figures are, but I'm just reporting what I found from their investor relations page, and they target 4 key areas that have to do with health, animal treatment, and environmentalism, and they claim that over 50% of global greenhouse gas emissions are driven by livestock rearing and processing. And I'm not sure if I'm reading this next one correctly, but apparently 29% of the global resources are used for animal production, with 45% of the global surface area used for those purposes as well. So when looking at countries like China that have huge pollution problems, giving them a meat alternative, especially, if these statistics are true, could be huge for them, and it could be a huge growth opportunity for Beyond Meat. So look, I'm sure that we could argue all day on whether a meat-based diet is healthier than a plant-based diet. And I'll just be honest with you guys, I personally do eat meat, and I do think it's healthy. But I also have no problem with there being vegetarians, and there being a product that caters to them and gives them an alternative to meat, for those of us that don't want to eat meat, that just want to have a vegetarian kind of based diet, a plant-based diet. And I think that that's a market that is growing. And, regardless of my personal views, it's definitely a market that, again, is growing and can be very lucrative. And also the whole environmentalist market as well. These are kind of growing movements and markets. So I think it's great that there's a product that can cater to those, to that audience and to that market, which is exactly what Beyond Meat is doing. So for those reasons, I think Beyond Meat will actually be very successful, because I don't see those movements or those markets going away anytime soon. I think they're actually going to get bigger. And again, even though, I might not be a part of it, I can still look at it objectively and see that it's a market that is growing and can be very lucrative for Beyond Meat. Now, I was looking at the ingredients list of Beyond Meat's products, and they had a lot of ingredients. I think they had like 18 ingredients on one of the packages that I was looking at. So I'm not a huge fan of that. It might not be as pure as they kind of market it, but for vegetarians, I think they would still look at that and say that it's pretty healthy for them, and maybe it's a good alternative to just eating a straight up hamburger or hot dog or whatever else. So anyway, when I think about Beyond Meat, I think they're doing a fantastic job of catering to that market. They have a very compelling product, and they're in a market that is growing. So as an investment, as an objective investment, I would absolutely love to buy that stock. It's a growth stock. It's a stock that is growing with very high growth. I would absolutely love to be a part of that. However, when we talk about an investment, we have to consider the valuation. And when I look at the valuation of Beyond Meat, it just makes absolute zero sense. I know I made that dumb comparison with Tesla earlier, but the reason I did that was because Tesla is one of the most hated companies out there. Yet when you look at Tesla, it looks like one of the best value stocks in the world compared to Beyond Meat. I mean, Beyond Meat's price is astronomically ridiculous. And when I look at Beyond Meat, I feel like they came in with a product that maybe we weren't really expecting. Maybe we kind of neglected this market. We didn't really think about how much growth and how much opportunity there is in the whole kind of plant-based alternative market. And they just kind of came out of nowhere with a lot of hype behind them, and everybody just kind of rushed into it. And they're thinking, man, this is a stock that is growing at a huge rate in this market that is getting bigger and bigger. This is a great opportunity. So everybody just flooded into the stock. But in my opinion, they're not thinking rationally, and I feel like that's created a bubble. And not only when we have a recession or a market crash will this stock get completely destroyed, in my opinion, but even just besides that, I think when investors kind of come to their senses, and also when insiders start selling, which is, dang it, it's something that I completely forgot to cover in my video, but the whole IPO lockup period, which I think is expiring in September or October. I wish I would have talked about it in the video. I completely forgot. But once that IPO lockup expiration occurs, there could be a lot of insider selling, which we already saw with this secondary offering. Most of it was insiders selling out of the stock, and that's because the stock has climbed by so much. So if it continues to get bigger, I could definitely see a lot of investors just wanting to cash in all of those profits, and that could lead to a little bit of a downtrend at that time. I don't know that it will. It's definitely not a stock that I would be willing to short because it has so much hype behind it, but it's definitely a possibility that, you know, the stock could eventually kind of come down to reality in the future. Having said that, if this stock comes crashing down to reality, I will absolutely keep an eye on it, and I would definitely consider it as an investment at that time. But as of right now, valuation just doesn't make any sense, and I just can't invest in it. I'm sorry, it's just not a good investment at this valuation. But anyway, I hope you guys enjoyed this video. Let me know what your thoughts are down below. I'd love to read your comments and thoughts. And do you think that Beyond Meat is in a bubble, or do you think that it's justified and they just have so much growth ahead of them that it just doesn't matter? It'll be maybe irrelevant in the future. I still think it matters, but I'd love to hear what you think. Anyway, that does it for this video. I hope you guys enjoyed it. If you did, make sure you hit the like button, and I'll catch you guys in the next one. Take care. Bye-bye.